We weren't expecting a lot from Powell's speech. This is typically not the forum where the Fed breaks news. What he did was he confirmed the path that the market expects: slow, gradual rate increases. We know that a rate hike is likely to come in September. The markets have not priced in completely that hike in December and future out years. But if you believe Powell, you believe that those rates are going to rise, but slowly and steadily as the economy can support.
Jeff, that seems to me like that would be all systems are go, at least at the Fed, when it comes to this rally. I mean, barring, escalation of the trade war, barring some of these sort of other outside events that we can't control whatsoever. When you take a look at the market itself, does it look pretty good to you?
It looks pretty good to us, but it's not exactly all systems go because we still have some headwinds, right? I mean, we've got a strong U.S. dollar. We've got stocks that have really rallied this year. And looking overseas, we don't have that global synchronized recovery that we talked about at the beginning of the year. So there are a few headwinds, which gives us a little caution. But overall, very good report by Powell today. And that does give some lift to the market. And there still is gas left in the tank, but we do have the caution flag out.
Stocks rallying are only a problem, Jeff, though, if you believe valuations are too high. But we also have earnings growth, so doesn't that offset that?
That's correct. That's correct. We had spectacular earnings growth for the second quarter, and we should have good earnings growth for the back half of the year. But if you look at where stocks are, they're priced for very good news. So any stumble in earnings, any issues with trade could really put investors off kilter and provide some short-term volatility. So a good story, but we're not, completely all in on the market heading higher. There will definitely be some volatility.
Nela, what is the bond market telling you, and what is it saying about risk globally?
I think what it's saying is that globally we're still seeing growth. We're still seeing in a U.S. economy that's set to increase. The biggest risk we see is that rates would rise too quickly and the Fed would tighten too quickly. And these are exactly the same risks that Powell noted in his speech.
There we're looking at the 10-year, and it's at 2.82. Everybody was saying it's going to go through 3, and it's come back down. And that would suggest to me that, as usual, bond investors are a little more sober than stock investors.
Right, that's true. And, we're seeing that flatter yield curve, in which a lot of people are reading as, are we going to dip into an inverted yield curve? And is that going to be the first signal that a recession is underway? And what we caution is that, just because the yield curve inverts doesn't mean that we see a recession the next day or an end to the bull market. It's what benefits investors is to stay invested, to have that mix of stocks and equities. We know that the market's getting more volatile. Have that mix of stocks, have that mix of fixed incomes, probably at the shorter duration given the flatness of the yield curve, but make sure that you have a portfolio that can address any volatility. Fixed income is an important part of that.